Okay, so I'm going to try and do another whiteboard video here. This is about NEXO. First off, not financial advice. Let's start there. Okay. Now, originally, back in the day when I did my NEXO videos, and I'll share those, hopefully right up there. Yeah, I got logos all over here. Just deal with it. I had 2 Bitcoin. So I had Bitcoin 1 and Bitcoin 2. All right. Now, the purpose of this was that this was going to be the one that we borrowed against, and this was going to be a reserve. So I'm going to make a couple of assumptions. First off, I'm going to say a Bitcoin equals 20K today. This is just an example. I'm just guy on a whiteboard, not financial advice. So Bitcoin equals 20K. All right, that's my first assumption. Okay, Bitcoin is 20K. So let's just say you wanted to borrow $10,000. The normal way you would do it on a site like NEXO, and this is the NEXO example, is you would take a Bitcoin and you deposit it into NEXO. That's step one. All right, Bitcoin to NEXO account. All right, this is assuming you already have a NEXO account set up. All right, so now I have $20,000. So I have 20K in Bitcoin on the site. So this is worth 20K, and then the site will give you a 10K credit line against that Bitcoin. And then you can take this and borrow against that. So you can get your $10,000 loan. The second Bitcoin will be kept in your own hardware wallet, software wallet, whatever you kept it in. Thank you. So you kept Bitcoin off to the side as a spare collateral in case Bitcoin went down. Okay. And that was if you borrowed $10,000 and Bitcoin went down from 20, you would be fine up until where Bitcoin gets to 12,000. And at 12,000, your loan to value would be about 83%. At 12,000, then you'd have to put Bitcoin 2 in to raise up your loan to value. I'm going to talk. If you're worried about your NEXO, if you're worried about your Bitcoin being at risk, this is one way to do it. So this is the old way to do it. Now the new way I'm going to say is instead of doing this directly, you can do this, but you can also take your Bitcoin, and before you borrow against your Bitcoin, you have this line. You would sell. I wouldn't deposit $20,000 of Bitcoin. I would deposit. Well, I don't know if I have a second color here. Yeah, I do. All right, let's try the second color, see if this will work. So rather than doing 20,000, I would deposit 13,000. Okay, now I have put $13,000 of Bitcoin in. And the step I would do before I borrowed, this is the old method, but I just go, and then this would be, I'm going to put a dollar sign to say that's your loan. So that's your loan. That's the old way. Bitcoin to credit line to just borrowing, again, taking that credit line and making a loan. That was the old way. The new way is deposit your Bitcoin, but only 13,000 of it. And then that 13,000 I would sell into USDC. Okay. The reason I do that, one, I have less risk. I haven't put a full Bitcoin in. I put, say, 2/3 of a Bitcoin. Okay. Convert that to USDC. Now, USDC, Bitcoin was 50% loan to value. That's what they give you 50% credit line against Bitcoin on NEXO. Same thing for Ethereum. Against USDC, they put 90%. So I would put 90%. So you put USDC in instead of Bitcoin, you can get away with less. So the USDC, now I have $13,000 USDC. I deposited 13,000 of Bitcoin and change that into USDC on the site. Or you can use a site like SimpleSwap on my website at the bottom. You can just go ahead and do it there and have it directly go there. But that's the simpler way. The simpler, more straightforward way is deposit an asset, turn it into USDC. Now, when you have 13,000 USDC, you're going to have a little more than 10K of a credit line, all right? And then you can make that into your loan. All right. So now that says loan. Believe me, that's a loan. All right. So this is, I'll say alternate one. That's your alternate one step. So instead of going Bitcoin to credit line to loan, you go to Bitcoin, add a step, change it to USDC. That gives you a higher loan to value, and you get the loan that way. Okay. So now what's happening in scenario one, you've got a full Bitcoin exposed to NEXO. Okay, and then you keeping this in reserve. In this scenario, you have less Bitcoin. You have, I want to say that's 0.65 or 2/3 of a Bitcoin. Convert that to USDC, and there's your loan. So now your exposure is, you're frozen. Basically, you're frozen now because the USDC is basically $1, and that's where it's going to stay. Versus Bitcoin can fluctuate, can go up and down with the market. So there's risk. Now, the positives and the negatives of this approach. Positive number one, you don't have as much Bitcoin exposed to another site like NEXO. Okay, so you have more available to reserve, more available to you in your wallet. You, instead of subtracting one full Bitcoin, you subtracted 2/3 of a Bitcoin. Second positive, you have more Bitcoin if you ever, to have on your own, to collateralize, borrow against whatever you wanted to do. Third thing is that your downside risk is basically nil now because USDC is a stable coin. It's $1 and it's 90% loan to value. So they're assuming that the fluctuation of USD is never going to be more than 10%. So you're fully collateralized and you're fine. The downside of this, if Bitcoin goes up, you don't have that Bitcoin that can float and go up. So if Bitcoin went up to 50,000, right, in the positive scenario, you'd only have a $10,000 loan even with a Bitcoin here, and then you'd have a higher credit line. So let's walk through that scenario and talk about that because I was asked about that as well. So if you had, let's say you deposited a Bitcoin, right, in this scenario, we're going to go back to step one. If you deposit a Bitcoin and it's instead of 20,000, let's say it goes to 100,000. So I'm going to say Bitcoin is now worth 100K. Okay, that's a future. So now with one Bitcoin and NEXO, my credit line will be 50K, 50%. So my loan of 10K, I'm way over collateralized. So now with a loan of 10K, with Bitcoin, I only need $20,000 of Bitcoin in here to collateralize 10K of a loan. So I could remove Bitcoin from here. If Bitcoin was 100K, I could remove let's say 3/4 of a Bitcoin easily, and you'd have 25K worth of Bitcoins collateralizing 10K. You'd have a loan value of 40%. You'd still be fine. So you've gained there. So what you've done is that if Bitcoin goes up, you've gained because you can pull 0.7 out, and then you have 1.7, and you get your loan all set up with your Bitcoin still intact and just supporting that loan. Now, again, if you do that and Bitcoin goes back down, then you've got that downside risk again. In this scenario, you have no downside risk because USDC is deemed a stable coin worth $1 and you're fine. You don't get the benefit of Bitcoin going up, but when Bitcoin goes up, you're going to want to take it out anyway. So this allows you to take the Bitcoin out ahead of time. So your exposure here is one full Bitcoin. The exposure here is one full Bitcoin. Your exposure here is, say, 2/3 of a Bitcoin. It's a 2/3, trust me. So you've got 1.3 Bitcoin on the side versus 1. So in this scenario, you have 1 Bitcoin on the side. Here you've got more than a Bitcoin because you didn't have to put all your Bitcoin in. So this is what I wanted to cover today. Hopefully this made more sense. I'm sure there's going to be more questions. That's why this is an ongoing discussion. I put my stuff on the bottom here, scrolling across the bottom. This is for you to use if you need to contact me. CryptoConfidential is where we talk about how to live the crypto life and how to borrow against your assets using sites like this. I understand the concerns that everybody has, but this mitigates your risk by saying, how do I hold as much Bitcoin as possible? How do I minimize my risk for a loan? The new step is to use alternate one. Instead of going from Bitcoin to your credit line to a loan, take the amount of Bitcoin you think that you need to collateralize turn it to USDC, borrow against USDC because you can get a 90% loan to value. So with 10K of a loan for USDC, you really only need about 11 and change. Let's say 11.5, right? Because 90% of 11.5 is going to be, well, 10% of that is 11.50. Subtract that and you get 10,350. So you can see with 11.5 worth of USDC, you can borrow 10K versus putting 20K of Bitcoin at risk where it could go down. And if it gets cut in half again, you have another issue where you have to add more Bitcoin. That won't happen if you do it with USDC. But again, the downside is that if Bitcoin goes up, USDC does not see the benefit However, you can sleep better at night, and if you have more Bitcoin on the side, if you do it this way. So in this method, you'd have 8,500 more Bitcoin available. So almost not quite half a Bitcoin, but just call it 1.4 Bitcoin in reserve instead of a full. So that extra 0.4 Bitcoin can grow. So it's kind of the best of both worlds. You get a little bit more exposure to an upside risk or an upside growth potential, and you minimize your downside risk by going to USDC. So this is the new recommended method that I would put forth, and I believe that Patrick would agree with me as well. So enough said today. Hopefully this video was clear. If not, leave a comment. You know how to get a hold of me, Telegram, my numbers, Patreon, all this stuff is going to be available. This video is coming out, I think, on July 1st. Looking through feedback, get some feedback from the community, and then I'll put it out for wider distribution on probably next Tuesday on YouTube. So, all right, lots said today. I'll close the door on the bureau, say follow the leader, and I will talk to you soon. Take care.